borrowing 1 million to invest in either stocks, money market fund, treasury bills, treasury bonds. Is it a wise idea? Is it a smart move? If I tell you how many guys that have got into my inbox asking me, hey Joseph, since the stock market is doing amazing, can I borrow money, say from a bank or from a SACCO, and invest that money in the stock market? Seems like I can make some cash, isn't it? I'm telling you, I've decided to make this video so that everyone can benefit out of that information. In case you might be thinking about that particular thing. I've ever tried to make this one, but it seems some of you have not watched that video. Let's get into the business. Now, by the way, if you're watching for the first time, this is Good Joseph speaking, and I try the best I can to post a video related to investment every day. So you have all the reasons to go ahead and subscribe to my YouTube channel. And don't forget, ask me the question or a question on the comment section, and I'll make a video out of it. This is Good Joseph, and if you're a returning subscriber, as always, thank you for your eyeballs. Let's get on the business now. You want to borrow. By the way, when I say borrowing to invest, does not apply only to Kenyan shilling, in case you're watching me from outside the Kenya. Now, is it wise to borrow? And I'm using 1 million as an example. You can even think of borrowing less than that or something like that. Now, let's do the mathematics here, okay? Let us compare the terms and conditions of borrowing and the returns that we're going to get, okay? On this side, let us have the bank. Let's just assume that you're borrowing this money from a bank or from a SACCO. And the loan that you're going to get here is 1 million. Are we together? So now, for those who have ever gotten into the debt and borrowing, if you go to your bank or your SACCO and borrow 1 million, how much are they going to ask you to pay them each and every month? Roughly? Tell me in the comment section. I've done this research. Probably they will ask you, hey, pay this money of ours for the next 3 years. Probably they're going to ask you, say, 33,000 each and every month, okay? 33,000 per month, that is what they're going to ask you. If they give you a longer period, of course, this figure will go down, but ultimately the interest will be bigger. Now, you borrow this 1 million, they are supposed to, or you are supposed to pay them each and every month. You're supposed to pay them a what? A 33,000. Are we together? Now, on the other side, you want to invest your money, say, on something like shares, for instance. Okay, you want to invest that money in shares. You can call them stocks or you can call them equities. Okay, now in one way or the other, equity may mean the same as two. Now, what happens is that, let's say you want to take this money and invest in a quite of a decent company, such as, say, Stanbic Bank. And I'm going to use a recent example I used, okay? And by the way, you must have a calculator because this one involves a lot of numbers. Now, you borrowed 1 million. Now you come with this 1 million into this company. Right now, as you speak, I'm using an example of a Stanbic Bank. It's one of the best performing company. Now, Stanbic Bank right now, as you speak, again, these figures can change. It's around 180 per share. Okay. Now, one share, it costs you 180 Kenyan shilling. Now, the point is, how much will you buy if you have yourself 1 million? So in other words, it will be 1 million, okay, divided by 180, so that we know how many shares you will own in that particular company. I got myself a calculator here. Simply take 1 million. Why? Because one share goes for that amount of money. So it is 1 million divided by 180 Kenyan shilling. So you're gonna get around 5,556 shares. Let's talk of 5,555 number of shares. I really hope I got it right. Yes, 1 million divided by 180. It's around 5,555 number of what? Number of shares. Now, the question is this. If that is the number of shares that you will get out of that particular company, and by the way, guys, always confirm. Sometimes I can make a mistake here. Please do not crucify me when I make a mistake here. You can always check out where the mistake can actually come from. Now, 5,555, those are the number of shares that you get. Now, let us ask ourselves, how much does a Stanbic Bank, for instance, pay per single share? We call it EPS, earning per share. Meaning, if you own one share of, say, this Stanbic Bank, how much will they pay you at the end of the year? How much will they pay you at the end of the year? Now, the question here is, they pay, according to this 2025-2026 financial year, they are paying around 34 shilling per share. Okay? Per what? Per share. Now, and how many shares do you have? 5,555 multiplied by 34 to know how much will you make in that particular year. That figure multiplied by 34 shilling, it is what you will make in that particular year, which is equivalent to, did I say 188,880? Oh wow, quite a number of eights, yeah? 188,888. Now, that is the gross income that you will get. Of course, you subject that money to the tax deductions. So in other words, the tax that you pay when you invest in shares is 5%. So deduct 5% from that figure. In other words, it means it is that figure that is 100%. So how about 95% of it? So you deduct that one. So that will be that figure. So it will be 5%. Let me see, 95%. This one is equivalent to 100. So what about 95? So it is that figure, which is 188,888. You multiply that by 100. Then that figure divide by 95. What the heck am I even doing? Now, guys, let me say approximately the 5% deduction from that figure, it will be, let's say, 10,000, for instance. Let's say it is 10,000. You can do that mathematics. Sometimes mathematics will actually be a bit, but anyway, we can do the mathematics. So it is 5 divided by 100. That's one. Then multiplied by 188. That's actually, it's 9,444. Let's say it's 10,000. So I was doing my approximation very well. If we deduct 10,000 there, so it will be around 178,888. So that is the money that you get at the end of the year. Let us now zoom in into this figure into the monthly fee. Now it is 178,888. Now that divide by 12 to see how much you are making in a month. That is around 14,900 and 14,900 and what? 907 per month. Now, simple question is this. You borrowed 1 million from a bank where you're supposed to pay each and every month 33,000 per month to invest in shares, for example, where you are getting quite of a good return and you're actually getting 14,907 per month. Now, the question is, you borrowed, they're asking you more than you're getting. So tell me from the comment section, is it a wise decision to do it? No, it is not. Because purely here, you're not getting the principal. You're getting only the interest. Because if you eat the principal, then you won't have the interest. But here, they are putting the principal they loaned you plus the interest on top of that. That's why it is summing up to 33,000. And that is the difference that most of the people don't get it. Because, but if you were to calculate only the interest, if they say, let's say for example, there's one thing that you're supposed to understand. When you're paying back your loan, you are paying interest plus a fraction of principal. Let's call it a fraction of principal. That is what you pay each and every month. But when you invest, you are getting principal entirely. For example, right now, say if you borrow money from a SACCO right now is giving you a return of say 12% per annum. Shares right now, percentage yield is going even to 16%. Let's even talk with 16%. So you're already 4% on top of the borrowing. Mathematically and realistically, you are making some cash. But when you are supposed to pay this loan, you are not only paying the interest, but also you are paying what? A principal on top of that. So again, you realize that loan is a very liquid thing that needs a lot of money at the end of the month compared to that what you are getting. But what if we had a loan that you are paying this structure? What if they ask you, you'll only be paying us that money on loans? And let's say, for example, you realize if they're asking you, say, 12%, let's say, for example, ultimately you're supposed to pay them 200K as interest. And this 200K, probably it means that you're supposed to pay them, say, 10K a month. Are we together? So if you're supposed to pay 10K, and then they tell you, hey, guess what? Be paying us at a rate at which you are getting the interest, which is 10,000, then pay us continuously until the day you'll finish $1 million. Then that will make sense to get that money, to invest it, so that you get what? You get what I'm saying? So there's some of the situations where you can't borrow to invest in money market fund or invest in stocks. I will not even calculate for money market fund because MMF right now is a little bit low in terms of interest rate, even compared to the stocks, even compared to the treasury bonds. Okay. Sometimes I see people running away from money market fund going to the treasury bills. It is more or less the same, unless maybe you are running towards there for diversification, not when you're chasing a quite of high returns, because they are more or less the same. So now, in this case regard, guys, so what is the answer to the ultimate question of this video? Should you borrow money from a bank or a SACCO to invest in these soft assets? The big answer to that question is a no, because you won't be able to sustain that particular move. But a situation comes in where you can borrow money and build some rentals, or you get into the real estate and it can actually make sense, because sometimes you can fetch a little bit more and it offers you a little bit higher liquid, because here you're not only earning in terms of the profit, or rather not in terms of the interest, but also you are getting something. For example, let's say you borrow 4 million to build some rentals, and maybe say those rentals are gunning you, say 4 million with rentals. By the way, it might actually earn you a little bit less. Probably talk of, if it gives you very good return, say 50,000 per month. So if you're getting 50,000 per month and maybe you are given 6 years to pay that loan, probably they will ask you for 40,000. Maybe you can left with 10. At times in Kenya, as we speak right now, and that's why I think the central bank is really trying to lower the interest rate, to a manageable levels, because on a very serious note, in Kenya, it does not make sense to leverage on debts. The only situation where you can leverage on debts is when you borrow to invest in, not to invest, to put your money in business. Understand, there is a difference between a business and a what? And sometimes some businesses, if you calculate their ROI, that is return on investment, it does not also make sense. So in Kenya, we are living in a very dicey situation whereby, for example, when you watch these wonderful, YouTubers or podcasters in the US, they will tell you, hey, borrow, buy this. For that makes sense in their country. Here, because, but for example, if you go to the US, for instance, you find that you're borrowing money at a rate of 4%, sometimes even 3%. In Japan recently, you were actually paying bank to put your money there. The rate was at negative. Nowadays, I think it's around 1 or 2%. Anyway, stand corrected. You can go verify those figures that I'm naming here. Okay. Now, the point here is, in Kenya, we still, can you imagine, we are at 9.5%. It's quite way high. Probably, I know you might say, hey, we are dealing with risky customers, which may make sense actually, because if you are living in a nation where people are not financially literate, then they become a stress, or they become a risk to the banks or the financial institution. So I think it is good when the nation is actually financially literate, so that when they get the money, they will know where to channel that money. Sometimes I feel bad when you see somebody borrowing money to start a business, and some of the money, sometimes a bigger fraction of the money, is being put towards, say, building the counters, the shelves, the branding, the painting, the advertisements, and that is quite a risky situation. Sometimes you find somebody is borrowing, sometimes even borrowing money to build real estate or build rental, sometimes it can shoot your foot, especially if you do not have a parcel of land. Can you imagine this? See, when you're getting into the real estate, there are two things here. One, there is what we call the strategic and non-strategic thing. Why? When you borrow to build rentals, but some of the money you're using to buy the land itself is not generating any income. That's like a dead asset. That is, yes, I know it's appreciating in value, and in future you can sell it, but you didn't buy to sell it, isn't it? So the point here is, the thing that is making you money here, it is the structure, not the land. Land is a shell to hold the structure that is generating the income. So for me, I will say you leverage on getting more of what is generating income more than getting it. And that's why you find it's a wrong idea to borrow money to buy a land somewhere that is not doing anything. It's just lying idle and something like that. It is good to understand those figures and those numbers. Are we together? Land itself may not function as an investment, but a shell to hold an investment. It's more of an asset that is not generating cash flow. Anyway, the moment I speak like this, you find most of the people crucify me because I'm distorting their norm, one thing that they have been understanding or knowing like forever. This is good, Joseph. In case you will need us to have a very private conversation, that is where now we check on your numbers. Excuse me. This is my number. You can shoot me a text on my WhatsApp. Kindly, strictly text me on WhatsApp. Sometimes you find that number is a bit busy in terms of calls. Text me on WhatsApp and then we can talk business. And don't forget, when you contact me, obviously there are some charges, but the good thing is that you can afford them. Are we together? This is Good Joseph. See you in the next one.